This is our Forex blog for June 21st, 2012. And like most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. We statistically compare every currency to every other one using multiple time frames and multiple different tools. The New Zealand, which is, you can see, mostly strong through most of the day until about 10:15. The top histogram shows the real-time trend. Then we have the 15-minute, hourly, daily, weekly, and monthly. And obviously, the more time frames that line up when you buy this versus a weakest one, like the yen, the higher the odds are in your favor, and the more pips you're likely to make if the trade works. The more time frames of trends that are in your favor, the better. I pretty much ignore the monthly, though. So if most of the real-time ones are strong, then you're good to buy that versus one that's weak. The histogram on the top is made up of 5 different tools. 3 of them measure the direction. In this case, the New Zealand's moving versus the rest. What percentage of New Zealand pairs are trending up or trending down? And the other 2 measure the intensity of that trend. So anytime 80 to 100% of New Zealand pairs, in this case, are going up and doing so with incredible intensity, you're going to have the green be above the 80 level here. And if it's in the direction of the 15-minute, hourly, daily, and weekly specifically, then you have a trend that's likely to make you a decent number of pips, and it makes it worth taking the risk. Now, one other thing, I'd like to show something new today. You can see the euro is weak pretty much most of the day. The real-time trend is showing more peaks of down momentum than up momentum. This one right here is a little bit more strength than weakness. Then you have a lot of weakness here followed by very little strength. That's a pattern. Anytime you see a lot of weakness followed by very little strength and the longer time frame trends are down, that's a trend that's very likely to continue down. You can see here at 9:30 it resumes its downtrend, and it pretty much trends down from then on. Notice the dollar here. The real-time trends are up. The counter trend moves have very little momentum compared to the previous moves. And then a little bit around 8:30 right here, the vast majority of dollar pairs start trending up on the 15, hourly, the daily trends up. That's enough to look for sells in the weak euro versus a strong dollar. One thing that I'd like to showcase today, and I've been trading with this for the last few weeks, we just added the point of control and value areas to this. This is a daily chart with our volume profile study on it. You can find it under Add Studies, and I have 20 days of tick data. And it goes through and looks at all the activity, every single price that was traded at throughout the day. It doesn't have volume for Forex data, so we use tick volume. And basically, in a nutshell, lets you see where the market spent the most time during the day. The highest level of activity is the point of control, and it's the longer line in the middle. And then you have the upper and lower value area, where 68% of the day's activity happened. So you can see yesterday the lower area, the value area, is here at 2680. And so underneath that area, it's very likely to go down, and you can look for shorts even before it hits the low down here at 36. This value area is 44 pips above the low. You can start looking for sells right here at 2680 versus 36. Now here's a 5 pips per bar range chart with a line I drew at that 2680 value area here. Let me zoom out a little bit so you can see this. When it's underneath that value area low, and especially when you get our counter trend, our trend signals, the red sell areas, you can see it went down a little bit. This signal here was a little bit early, but then it went down. The signal happened right here. That one went down about 13 pips. This one right here fell 15. This one here fell 25. This one here fell 50. This one here fell about 40. This one here only fell about 8. And this one here looks like it's still trending down. But you can see underneath the value area, the market's likely to go lower. Now I'm going to add the previous day's low to this study just so you can see where it's at. Previous day's high and low. And you can see that's all the way down here. Value area is up here, and knowing where, the point of control is actually at 2702. That's the big line in the middle here. That's where the most activity happened, 27, I'm sorry, I take that back. The previous day's right here, yeah, 2702. That's where the most activity happened the previous day. Notice the market can't get above 2700 today. It's not a coincidence. These value area, the point of control is a major support resistance. Coming up to it from underneath, it's resistance. Coming down to it from above, it's support. And you can see it was major resistance right here, major resistance right here. Basically, once it broke underneath the value area, you want to look for sales. And you can get into trends falling way before the low got broken, which a lot of traders use as their breakouts. I prefer to use the value area, getting into the trend, in this case, 35, 40 pips earlier than most other traders out there. And there was a little bit of choppiness, went down, then back up, went down, went down, went down. Not the biggest moves. The biggest moves happened after it broke through the previous day's low, obviously. This one right here got you in to the trade. I think the signal happened here at 58, got in about 20 pips early, and then it broke the low. But it's very useful to help you in your trading. So that's just a preview of what's going to be released soon. And this works, by the way, on not only daily charts, weekly charts, but also intraday charts. Let's just quickly show you what a 60-minute point of control looks like. And notice the middle areas, that's the point of control. When it's above the value area, notice you have this nice trend up. It's kind of got a nice little area right here, false breakout underneath. It broke out that next bar and went up a lot. The next bar opened up, and when it's underneath this area, it trended down. This one trended down, and notice where the point of control is here. This one opened, tried to go up, and then went down. You could actually sell it here at 2603 versus the low down here. 10 pips earlier entry into a trade, and you can also put your stops right above the value area high, because if the market breaks down and then comes back above, in this case 2615, you're likely to go back up higher, and you would be most likely stopped out at a higher price. So you can basically use longer time frame charts and get the benefit of them, less noise, less trades, higher winning percentage. And you can also get the benefit of a smaller time frame chart, which gives you smaller losses. You can put your stop under certain circumstances right here. Now this bar right here had a very big value area. This bar right here had a very tiny value area. And that's what's very useful in trading with this. Right now you can see the point of control is right here at 2573. It's about 9 pips underneath there, and this updates every 5 seconds live. It's a very processor intensive application, so we only have it update every 5 seconds. So getting back to our regular class, this is our sortable currency meter, and basically we're looking to buy the strongest currencies versus the weak and sell the weakest versus the strong. I'm sorting this right now by the strongest one. Notice the dollar, most of the time frames are up, except the weekly and monthly. The weekly shifted up and the monthly shifted up a little bit later. The yen is also very strong today, but it's clearly got a much weaker, longer time frame trend than the dollar. So you're better off trading, the weak currencies like the Swiss, the Australian, the euros, weak on all time frames for the most part, against the dollar. Now let's take a look at the dollar Swiss. Strong dollar, weak Swiss. We're going to bring up, and I'm going to incorporate the value area. I haven't even looked at this yet. This has to download tick data in order to draw itself on the chart. So it can take, when you first load it, maybe 30 seconds, 20 seconds to load. All right, so you can see the 60-minute value areas. I'm going to put the daily on by hitting period D. It changes it to a daily chart. And notice, today's upper value area here is at 9471. So 9471 is where you can look for buys in the dollar Swiss. We'll bring up a 5 pips per bar chart, and we're looking for the price to go above the value area high, which is 9471. Notice the value area high is way down here versus the previous day's high. Now if you were trading today and looking for buys, you might have a loss in this one. 15 pip win, loss, maybe 10 pip win. This trade right here went up about 20 pips. And this breakout right here got you in a little bit early at 94.94, 8 pips early, and then the market trended up. But basically, above that 94.70 area, you were looking for buys. The sell trades really didn't pan out as well, and the forces that were likely to affect your trade were to the upside because it's above where the market spent 68% of its trading activity the previous day. And actually just slightly above the value area, maybe 10 pips above that, is where it spent 95% of its activity. So really from about 94, 81, 82 area, yesterday it spent 85, 90% of its activity. Above that area, it's very likely there's no natural resistance in the market because the market spent very little time up there. And that's why, the trends continue. Now the New Zealand, you can see all of a sudden got weak, but all the longer time frame trends are up. Normally you don't want to trade a currency that has incredible weakness when the longer time frame trends are up. But if you use the daily volume profile, you can increase your odds dramatically while reducing and keeping your risk low. Here's the New Zealand dollar. Clearly it's been going up a considerable number of pips. You can see just from less than a month ago, it's gone up 500 pips. So it obviously has room to come down, to pull back to wherever the 38% retracement is, which might be 77.50. It's got potential of 250 pips to the downside. Yesterday's value area, the lower limit of it was at 79.52. So we bring up a New Zealand dollar chart in 79.52 is where the most basically it's very likely to trend down underneath this level. Now above that level, the trend was clearly up, but it wasn't above the upper limit of the value area, which is a previous day's high, until right here. So you might have had a small trade here, a loss, small loss, small win, and then you're waiting for it. Once in the value area, it's likely to be more choppy. When it breaks below 79.50, you got into this trend, and notice it's fallen about almost 50 pips. If you waited for the previous day's low, which is 30 pips below that to get short, and there's none of our Forex sell signals have come up before that. If you basically saw some sell signals right here and then it broke down underneath that level, you get short, you can see it's fallen 50 pips. So this is a perfect example of why I have been using this the last few weeks for my own trading, and I've been kind of eyeballing the value area. Most days it's pretty easy to spot. Some days it's very difficult to spot where the value area is because the market spends a lot of time at a lot of different prices throughout the day. Yesterday's was pretty clear, and underneath that 79.52 area, it's very likely to drop. And you look once it broke that area right here, because there's no real support underneath there, it fell 30 pips like a vacuum. This is going to allow you to catch these breakout trades early, and other traders that are waiting to sell the 79.19 previous day's low right here are up 15 pips, and you are up almost 50 pips, and it looks like it's still trending down. The New Zealand, or I'm sorry, this is the New Zealand. It's switched to this one right here. Obviously the Australian is much weaker than the New Zealand. But looking for sell signals in one of the strongest currencies, you can see the daily, weekly, monthly trend are still up on this one because it's so strong. The trade still worked using the value areas, and you're able to get into a trade at a much earlier price. Let's try the Australian dollar, which makes a lot more sense because the Australian has at least the daily trend shifted down on this much earlier. In fact, the New Zealand still hasn't even switched down yet. Noticing this one, it had 1, 2, 3, 4 days up. Yesterday was a close down, but really didn't close down that much. This one's very likely to do for a pullback. And notice the value area price, the low of the value area was right here at 1.0180. 1.0180. So we're going to bring up the chart. $1.0180 is the value area low. Somewhere around right here. And notice, earlier, dropped, small loss here, nice trade here, nice trade, nice trade. Underneath that area, you're looking for sells all the way up here. And because it's been up 4 days in a row, you might also look to draw your fibs off of previous swings, get short right here, because it's right near the low of the value area, and it was underneath the value area most of the day. This trade right here is very likely to work. Notice a two-wave counter trend move. It was trending down, made a two-wave counter trend move. The daily chart clearly looked like it was going to reverse. Here's the value area low of the previous day. And you got into this trend pretty much at the top tick. It went one tick above the 1.382 fib profit target and then fell the rest of the day. So underneath that area, notice right here, 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 you're looking to sell this. And again, the low yesterday is at 35. The value area here is at 80. You're looking for sells about 45 pips above where most of the people that are trading off of longer term charts are looking for breakouts. You're in this way before the real meat of the trend happened with less amount of risk.